Hi guys, hope you're well. Before we do the review of a trade that I took today, I wanted us to take a look at the higher time frame chart. This is the weekly chart. The way you tell is looking at this. After the US 100 cash CFD dot 1W, that is 1 week. So if it says 1 day, that is 1 day, and so on and so forth. So this is this week's candlestick that started on Sunday, 6 p.m. Eastern Time, New York local time. Time is always New York time. This was last week's candlestick. The whole week we opened here, traded down. I'm grading this week. Remember, weeks are gaps. Price moves to do two things: either to levels of inefficiency or to fill inefficiencies, and not necessarily to fill inefficiencies completely, or to rebalance inefficiencies completely. But price will draw to where inefficiencies are, or to where liquidity is, and that's it. So those are the two things that we always look for. So you can see I had the gradings for this week. It's a long week. So this week we've opened here. You can see we are moving up. But last week, notice where we stopped. Midpoint is here. And when we go to lower time frames, you'll also see these levels. So we pierced the consequent encroachment or midpoint of that tail, but we didn't get to this 8th level, 0.375. Then we rejected, moved up, made the high of the week there, and came and closed right there. So you can imagine closing there, and then the next candlestick is opening here. That's a huge gap. So where is this price heading? The way I see, ultimately, it's possible to get there in the next couple of weeks. It doesn't have to be this week, but before it even gets there, there's also this high here. And even before it gets to that high, we have this week to contend with, this week here. So it's good to grade that. Come here to settings, make sure visibility, it's shown on the weekly, daily, on the lower time frames as well. So I'll have those levels there. You'll be seeing those levels on my lower time frame chart as targets. Those will be so we have to deal with these levels first before we get there. So in short, I'm telling you I'm bullish this week. 1 day. That's the daily chart. That's how the daily chart looks. So these are the levels that we had graded from the weekly time frame, that tail or the week on the weekly time frame. You can see how we pierced the low, the consequent encroachment, here, and this was on 21st January. Then we traded higher, came back inside this daily suspension block, went above it, went to the low again, went high on Friday. On Friday we got to this volume imbalance on the daily chart, pierced it. You will see the exact level because you can see these are gradings of the same, but here it looks a bit compressed. But once we drop to lower time frames, you'll be able to see those levels properly. But you can see those are gradings of that daily volume imbalance. I had graded this as well. This week, and I wanted to see, my interest was on the consequent encroachment. And again, when we drop to a lower time frame, I'll show you how this was used. You can see the levels where we are having an interest in, and I've noticed my level here on the weekly chart. I've not toggled for it to be shown on the daily. That's how it looks on the daily chart. So ultimately, my interest is up here. New all-time highs. So these levels will still be shown on the lower time frames. Let's have a look at the 15-minute chart. Let's review Friday's trading first. So you'll notice how we were targeting some relative equal highs. This high is here on Friday, and we got that retracement, and I executed right here, targeting these highs, and you saw the fill on Friday. But notice where we stopped. Inside this yellow shaded area, which is the volume imbalance on the daily chart that we saw, we have the gradings of that inefficiency as well. Look at that. 0.25. That's the lower quadrant of that inefficiency. That is what stopped price there. And then we retrace into the close. And closed right there. Then on Sunday, at 6 p.m. Sorry, you can see 1800. That was the opening price. That's what I was telling you on the WhatsApp channel. It's not good to hold over the weekend in these market conditions and the geopolitical events occurring all around. Things are crazy right now. Look at that gap, 236 handles. That's too much. That's too much risk. If you saw this move on Friday and thought this week could be bullish and you bought and you were holding, it would have stopped you out at the open and look, it's buying again. So it's not good to hold risk over the weekend. So today is 26th. Today open is midnight, New York time. That's where we opened. So that's the opening price right there. 25, 505.1. That was the opening price. I won't annotate it, but let me give it a very shouting color. So on Mondays, I like watching to see what they will do until around 8:30, 9:30. So you can see we opened there, initially traded high, fell short of this midpoint of that week that we saw on the daily chart. And you can see how it was used here as well. The bodies tell you the narrative. And look at this fair value gap. It's laying on top of that level. That is a high probability. And the displacement took out a swing low. Yeah, this low. Because it has a low that's higher to the left and to the right. So that's a swing low. So that is a bearish shift in market structure on top of a quadrant level on a higher time frame, displacement. So the bodies are respecting that level. It's indicating to you that it wants to move lower. So that could have been a scalp before the close. And indeed, you can see how low it went. Then we opened, started moving towards the gap. Gap closure, it was closed here. After we opened at midnight, and then you can see the market gravitated higher, failed to get to that level here. Retraced, where is it retracing to? Suspension block. The upper 8th level, 0.125, it can't even get to the upper quadrant. Where are the bodies? The wicks do the damage. Where are the bodies? Look at the bodies here. They're above it. So what does that indicate to you? It's bullish. I would like to see them take out that swing high. That's a swing high. They do there. Is it with momentum? Yes. That is a displacement. Do they leave a fair value gap? In the wake of that displacement, yes. There it is. What time does it return to that fair value gap? That candlestick is at 8:30. 8:30, we had medium impact news. 2 folders. You can check that, you will see. That was a Judas swing. Where are the bodies? Above that fair value gap. So what does that tell you? The narrative is still bullish. After that, what do we have here? That's a swing high, with a lower high to the left and to the right. Swing high. Displacement. Does that displacement leave a fair value gap? Yes. That's how you read order flow. It's bullish. Displaces higher, leaves a fair value gap. So always wait for price to come and retest that fair value gap. It doesn't always happen, but it's good. That will be your perfect entry. If you look here, this tail here did not get to the midpoint of that fair value gap. So if price can't even print to the midpoint of that, that's bullish. What time is that retracement happening? 9:30. Then boom, look at that reaction. Look at that reaction. So what I would see here, I would see a low of the day formed in London. Then now it starts moving higher. In New York, you get a retracement, another retracement here, and then the move continues. So I was watching the price at around 10, the 10 a.m. silver bullet hour, 10 to 11, right there. So when you see this, so in my mind, I see this as a breakaway gap because they left a portion of that fair value gap open. So I see that as a breakaway gap. Then the next gap that forms, I expect that to be a measuring gap. And if you've studied ICT, measuring gaps don't get traded back to. There's a little volume imbalance there, so that's your measuring gap. So I didn't expect price to come back to it at all. So this is on a 15-minute chart. So now, let me go back to a 5-minute chart with all that narrative in mind. So the low of the day was formed in London. We are not interested in that. Silver bullets. Then we are here. There's another block here. Price can return to it. So you see how that fair value gap looks. On the 5-minute, you can't see it as a fair value gap. There's a small fair value gap here. Right there. Remember, price is fractal. So what you see on a higher time frame, you're likely to see it on a lower time frame. Does price get to that? Yes, it just taps into it. Around the 15-minute chart, remember I was looking at this being used as a measuring a price not to return to it. So now, if I can show you the execution marks, I'll have to log in. I apologize. Should have done this before starting the recording, but it's fine. There we are. So at 10 a.m., which is here, you can see at 10 a.m., I was comfortable to just buy right at 10 a.m. because I knew price is not likely to come here. But you see on the 5-minute chart, there was that. So it came to that. My stop has to be below the consequent encroachment of that measuring up, because price is not supposed to come below there. It can just wick inside, but even this wick, look at the bodies. The bodies are stopping above it. So the wicks do the damage, the bodies tell the story. Look what we got. I was aiming for about 40 handles. We got it. The exit was at 10:20. So in about 20 minutes, that was it. Delivered. But you see, even on the 5-minute chart, the bodies of the candlesticks are remaining above the inefficiencies. Look here, just the wicks doing the damage. This is how you read order flow, and you know it's bullish. So when you see this, you'll be crazy to start shorting this kind of a market, because institutional order flow is showing to you that it's bullish. It wants to keep moving higher. So that was the business and the logic. I hope this was helpful to someone. If that's the case, you can leave a comment in the comment section, and I'll see you in the next video.